Hello and welcome to American Friction, the podcast which is statistically better than any other podcast.
Right.
And I'm statistically, equal to or fine alongside any other podcast host. I'm Jacob Jarvis, and Chris, who are you?
Not sure.
And Nikki, you're Nikki McCann Ramirez, aren't you? But introduce yourself, because people have frequently said that you obviously say your name loads better than I do. So take it away.
So my name is Nikki McCann Ramirez, and I don't know who I am. I struggle with my identity, on a daily basis.
Now you say Nikki's name.
Nikki McCann Ramirez.
Nikki McCann Ramirez.
I know, I struggle. Right, okay, so this episode today that we are doing, we are talking about the US economy. And we interview our friend of the pod, Mark Zandi from Moody's Analytics, about why it's all going bloody wrong.
Yeah.
It really is going wrong. I mean, we can't take any sort of joy in that because Britain's be going wrong as well.
Yeah.
But anyway, it's going wrong. But after we recorded that conversation with Mark, Trump went a bit wild again with tariffs.
You know what happened? He knew we'd recorded a podcast.
He did.
About economics.
He listens and he likes to ruin the pod.
Yeah.
But Chris, so just so we can be up to date, so we're going to do a little update and then we'll get into our conversation with Mark, who is smarter than us on this stuff. But Chris, what tariffs has he dropped like a mixtape?
A lot of tariffs.
There's hot new tariffs just dropped.
Yeah.
Big things coming soon. They're tariffs.
Fire
hot
new tariffs.
New tariffs in your area.
Yeah. Okay. Good start.
Hot tariffs next door.
Podcast.
Okay, stop now. So there's about 90 reciprocal tariffs.
Okay, 90.
That's what's been reported. Previously, there was a deadline of August 7th in place for countries to basically reach a deal with the US or face the wrath of these tariffs.
Whoa.
Yeah.
The Wrath of Tariffs is quite a good metal album name.
Wrath. I tried, but that does not fit.
No.
So that's what we're seeing now, essentially. There's too many countries that have been hit with tariffs.
No, name all of them. Top of your head.
I'll name some for you.
Oh, you like tariffs? Name one.
Literally.
Okay, here's one. India.
Okay, India, yeah.
That's been hit hard, 50% rate, which is pretty bad for them, obviously. But a condition for them to reach a deal with the US was that Trump had ordered that they stop buying Russian oil, and they haven't done that. Hence why they've now been hit with this tariff. There's also a 50% tariff rate for Brazil, which, from what I can tell, is mostly a political move in terms of a backlash from Trump in retaliation to the prosecution of former President Jair Bolsonaro, who was a
bad dude.
He was a bad dude.
Yeah, but they were besties.
Well, it seems like almost a revenge move, it seems. There are other reasons for it. But now Brazil is getting the World Trade Organization involved to basically say, hey, this isn't fair. Get rid of these hot tariffs, please. So we'll see where that goes. There's also lodged tariffs for Mexico, South Africa, and also something that I found quite interesting, Taiwan as well. I think it's probably quite obvious as to why in terms of like chips production and stuff. But there's a 20% tariff rate on Taiwan, and that raises questions in terms of, well, what is international support from the US for Taiwan now, who, let's face it, every day face a ever-present danger that China is going to take over their sovereignty. And we've seen US politicians go to Taiwan. Pelosi, if you remember that, flew over there in that unprecedented visit that caused quite a lot of, it stirred up quite a lot of things amongst the US and China. So this new tariff, I think, places new questions upon what exactly is the relationship between Taiwan and the US. And if Taiwan were to face attack from China, where would the US actually stand on it?
Nikki, why won't Trump just drop it with the tariffs? It seems like it's just not a good look for anyone. It's not working out well. Why is he not backing off of these at all, do you think?
because this is not a man who understands like the subtle nuances of actual like diplomatic negotiation and deal crafting. He's a man who says, you give me what I want or I fuck you over.
Yeah.
And you can go back to the beginning of his career when he was a real estate developer here in New York City. He's always been like the strongman type. And I think in his view, tariff is synonymous with punishment, but he is misplacing who is actually getting punished here. Like, yes, it's an economic penalty on our trade partners, but it's an economic penalty that a significant portion of the cost and the actual like economic damage is borne out by the American consumer. But Donald Trump and his allies do not think at the micro level. They do not think about the economy on the scale of what is this doing to small businesses, to individual consumers, to people whose grocery prices and gas prices are going to go up. They conceptualize the economy as GDP, stock go up, market go good, portfolio get bigger, you know? It's a very sort of like macro view of economics, which is like, of course, important. I studied economics. Like the macro economy is huge and critical. But that disconnect between sort of what is happening at the macro level and the micro level and how the macro like funnels down into small scale consumption and small scale affordability, that's something that Trump cannot conceptualize. And he's also just playing this like international game of chicken where he's like, I'm keeping this date. I'm not letting this go. You give me what I want or it goes into effect. And we're already seeing it. Like prices are getting more expensive. Job creation isn't happening. Investors are still really balking at the United States because they don't, this like economic policy has been so schizophrenic that confidence is down. And so, you know, he's not going to let this go because he's a dog with a bone and he's incapable of like admitting when something is a bad idea. But at the end of the day, I honestly think it's because for as much as he talks about, you know, helping the little guy, he is incapable of conceptualizing what the little guy's economic condition actually is because he has been rich since birth.
Right, now you're all up to date with what's been going on. Let's dive into mine and Chris's interview with Mark Zandi. Here's one we made earlier. Hello and welcome to American Friction, the US politics podcast that can count, divide, and subtract really, really very well, actually. And I can multiply too, don't you worry. I'm Jacob Jarvis.
And I can only sometimes divide, but that's okay. I'm Chris Jones. But someone who hates people who can do all of those things is Donald Trump. He recently fired the Bureau of Labor Statistics commissioner after a report she filed that he simply didn't like the look of. The report showed that jobs growth in the US had stalled this summer, and Trump says the numbers she presented are fake.
Has he got any evidence of this? No, actually he doesn't. Of course he doesn't. But what do these numbers show, and what state is the US economy in right now? Back with us once again to tell us how it all really is Mark Zandi, chief economist of Moody's Analytics and host of the Inside Economics podcast. Mark, welcome back.
So good to be with you. Thanks for the opportunity. And hey, guys, I apologize for the dogs in the background here. I got some folks working on some stuff, and it's out of my control. So we'll do our best. I apologize.
It's great to speak to you again, Mark. Let's start off with the firing of Erica McEntire, the Bureau of Labor Statistics commissioner. What was it that Trump took such a disliking to here?
Well, the bad jobs numbers. The Bureau of Labor Statistics publishes data once a month on jobs, and they were weak, very weak, indicative of an economy that's struggling. I'd even go so far as to say on the precipice of recession. And the thing that kind of set everyone off was the revisions to the data. As you may know, the estimates are based on a survey of businesses and of households. Survey responses come in over time, and as the BLS gets more survey responses, it updates its estimates, and so it can revise the data. This past month, the revisions were very large by historical standards, and they were all downward, meaning less job growth. So it now feels like the U.S. economy, still creating jobs. It's not in recession, but it's pretty darn close to stall speed at this point.
And did those numbers show why there was any reason for this stalling in jobs growth, perhaps?
Yeah, you can trace it all the way back to policy. Most obviously, the tariffs, the higher U.S. tariffs. It's starting to do some real damage. The tariffs are a tax, an effective tax on American consumers and businesses. And you can see it in earnings, you can see it in spending, you can see it in where the job growth is weakest. It's in sectors that are most sensitive to the tariffs and trade. For example, manufacturing activity. Manufacturers are obviously on the front lines of what's going on with the tariffs, and they're losing jobs, and more jobs than has been the case in recent past. So, yeah, you can easily connect the dots between what we're seeing in the economy, the jobs numbers, other data, and the policies that are being implemented.
With Trump claiming that the data was rigged and faked and all this sort of thing, sometimes when they talk about conspiracies like that, is there anyone it would benefit for it to have been rigged? Would there be any reason for them to particularly want to have made the numbers look one way and then change them? Is there any rational explanation that would be good for someone other than Trump, a benefit to them?
Well, I mean, I just compare what the president said. He says that these revisions were intended to make him look bad. I mean, obviously, there's a lot of debate about the efficacy of the policies of tariffs, trade, immigration, DOGE cuts. A lot of things going on here, obviously. The BBB bill, the legislation, tax spending legislation. So a big question is, what impact is this going to have on the economy? And, it's having a very negative impact. The economy is struggling with trying to digest the fallout from all these policies. But the president is, saying, look, you're trying to make me look bad. You're trying to make my policies look bad. So, he's saying the folks that don't agree with him are benefiting from this.
Data feels like it's going to become politicized. What damage could that have for the American economy? Because surely it's going to also make, on a global scale, people just aren't going to trust the American economy. And did this start to turn the American economy into, comparable to other countries who sort of cook the numbers when it comes to what they're saying about themselves?
Well, let me say, I think it's going to be pretty hard to cook the numbers. I mean, even if you tried, it's going to be pretty tough because there's a lot of moving parts here, a lot of people involved. The BLS commissioner, it doesn't have a direct impact on the way the numbers are calculated. I mean, maybe over time, I'm, really stretching here, but I suspect that it'll be very, very difficult to do that. Now, it's not only about the reality, but it's also about the perception. And you're right, the perception might be, well, look, these numbers are, how can we trust them? And that's not a good thing. That can have all kinds of implications. I mean, like one of the clearest implications is measuring inflation. The Bureau of Labor Statistics calculates employment, but it also calculates the Consumer Price Index, the major measure of inflation in the U.S. And if there's questions about the accuracy of inflation, that can have actual real life impacts on interest rates, right? There's bonds out there, Treasury inflation protected securities that, the interest rate on that bond is determined by inflation. So if you can't measure inflation or you're unsure about the quality of the information you're getting about inflation, you as the investor are going to demand a higher interest rate to compensate for that uncertainty. So interest rates are higher, and it's not a percentage point difference, but it could be a basis point or 2 basis point, which is a little bitty increase in interest rates, but you're attaching that to the hundreds of billions, trillions of dollars of bonds.
Sure.
That's real money. So that's just one of a gazillion examples I can give you. So the implications of this could be quite substantive to the economy's performance, to taxpayers, to everybody.
The last time we spoke about how under Biden the economy did seem to be doing pretty well, even though no one seemed to think it was. And then now, Trump is adamant that the economy is doing incredibly well under him, and clearly some of his supporters seem to believe the same. Is it booming in any way? Can we use that sort of terminology that Trump is using himself? Is that at all close to reality for the economy?
Well, from my perspective, the economy is struggling. I mean, GDP, that's the value of all the things we produce, that grew almost 3% last year, 2024, calendar year 2024. First half of this year, it's grown just over 1%. And that's below the economy's so-called potential, which is most folks consider that to be around 2, which means that's why we're seeing this very significant weakening in job growth. Job growth is clearly weakening. We can debate how much, but it's clearly weakening. Manufacturing, I mentioned, that's in recession by many indicators, contracting. Construction, despite the boom in AI and data center construction for the AI, the rest of construction is falling off very quickly. It's in recession. Consumer spending all in. If I take all the things that we buy as American consumers, just for inflation, last data point is for June. We spent less in June than we did back in December of last year. I mean, I can go on and on and on. Every indicator that I look at suggests not recession. We're not there yet, but the economy is struggling, and the direction of travel feels pretty clear. This economy is going to have some problems dead ahead.
How close does recession feel, and how much closer do we feel this far into the Trump presidency? When we spoke in April, to change that to, a few months down the line, how close does it feel like that is going to be in the near future?
Close. The best measure, so-called coincident measure of the economy is jobs. Here in the U.S., the way we define a recession is a group of academic economists at the National Bureau of Economic Research sit down, look at a plethora of data, and make an assessment. Is the economy experiencing a broad-based, persistent contraction in activity? If it is, that's in recession. And they use a lot of different economic data to make that judgment. But the number one, most important by far and away, is jobs, employment, payroll. That number we've been talking about. And it feels like, after you look at the data, that underlying job growth, it goes up, it goes down month to month all around. But if you kind of cut through the noise, it feels like job growth is maybe 25K a month, at most 50K. Once it goes negative, once you get a negative sign, that's recession. In fact, you can go back to every recession we've had since the beginning of time. The month the employment numbers go negative on a consistent basis, the start of that consistent decline is the month that the economy goes into recession. So that's how close we are. We're 25, 50K in monthly job growth away from recession.
You mentioned job growth there, and something that I saw that you have mentioned previously in your work is the foreign-born workforce has shrunk across America. Is that something that's basically a direct outcome of Trump's immigration policies and ICE raids, for example? When you look at farming, for example, are we basically starting to see the fruits of those immigration policies impacting the economy in this way?
Yes. It's not just President Trump. It started under President Biden, right? If you go back this time last year, President Biden issued an executive order making it much tougher for asylum seekers to come to the U.S., and that had a big impact. You saw a big drop in the number of folks coming across the southern border. And of course, President Trump has doubled, tripled down on that policy. There's nobody coming across the southern border. And there's a lot of folks that are being deported, either involuntarily or there's self-deportation. People are leaving because they're just scared. And that's showing up clearly in the data you mentioned. So if I go back a year ago and I look at the growth in the number of foreign-born in the labor force, these are folks that are working or looking for work, it was growing 5% year over year. I mean, that's a lot. So all that surge in immigration you saw back under earlier on in the President Biden's administration, those folks came across the border and they applied for work, which they could do. They were asylum seekers. They got work authorization within 6, 9, 12 months, and they went to work. But that's all gone now. And now, if you look at the most recent data, and here, let me just quickly caveat it. You have to do a little bit of calculations because there's all kinds of nuances in the data. But I've done these as best I can. My calculation shows that the number of foreign-born in the labor force is actually declining now. So we went from 5% growth, which is boom.
Yeah,
That's a booming number, to negative. And that's a real problem for a lot of businesses that need immigrants. Construction, over a third or close to a third of workers in the construction trades are immigrants. Agriculture, manufacturing, transportation, distribution, wholesaling, childcare, elder care, healthcare. All these jobs are very, very dependent on immigrant workers, and of course they're obviously struggling at this point.
Does it seem, though, at the minute that, despite this and despite the data points that you've mentioned there, does it seem as though the Trump administration has any kind of plan to help these industries, pick up the lack of workers that were previously made up by foreign-born people seeking asylum and applying for jobs? Is there any plan to make industries work in the same way that they have been working?
No. There's some flexibility there, though. Like there was a lot of crackdown on immigrant workers working at meatpacking plants. So the meatpacking plants couldn't produce meat. Meat prices are rising. And the administration says, okay, let's cool it on the ICE raids on meatpacking plants, that kind of thing. So there's clearly the administration is watching all this very carefully. They obviously don't want these industries to be disrupted. So when they can, they adjust policy. Same with the tariffs, right?
Yeah.
The tariffs are off again, on again, this, that, and everything else. And there's a lot of adjustments going on to try to smooth out the ill effects of the tariffs on businesses. So that's the response.
Retailers, businesses, people who are investing in the economy, it seems to me consistently what they want is, consistency. They want to know what's going to go on. When Trump keeps bottling it on the tariffs in the way he does and pulls them back and puts them back on, is that becoming pointless in terms of the consumers aren't seeing prices alleviate when the tariffs come up, are they? Are retailers just basically saying, well, we have to factor these higher prices because we don't know if the tariffs will come back? Are we seeing any sort of fluctuations in the economy, sort of things getting cheaper when tariffs go down or not? Or basically are people preparing for the worst case scenarios and keeping prices high across the board now?
Well, I think what's happened is because the tariffs are so up and down and all around, business people don't know, where the tariffs are going to land. What's happened is they've been slow to raise prices because they don't want to raise them, and then get whipsawed. The tariffs come back in and they've lost market share. So actually what's happened, I think, is business people have delayed any price increases, waiting to see where these tariffs actually go. And now that we're seeing where they're going and that they're real, that all the talk that these tariffs might go away, that now no one believes that, and they shouldn't. They're here to stay, and that's now why we're seeing these businesses pass through the higher tariff costs to consumers, and we'll see more of that over the next 3, 6, 9 months.
Mark, you may not be able to answer this, but in terms of these tariffs, have we seen countries, for example, the UK, taking decisions against investing their business in the US, for example? They just don't see the benefits of moving any of their business to the US.
I don't see any evidence that we're going to see any pickup in foreign investment in the U.S. as a result of the tariffs. I just don't see that. There was a great survey done not too long ago by the Dallas Federal Reserve asking businesses, what are you going to do with these tariffs? Number one thing they were going to do is pass the cost along to consumers. Second thing they were going to do, many fewer responded this way, but the second thing was, we're going to eat it. We're going to lower our profit margin. The last thing they were going to do by orders of magnitude was, I'm going to move operations into the United States. And the reason why they're not doing that is when you make an investment, like in a manufacturing facility, it takes years to build the facility. Yeah. And then you have that facility in operation for decades after that. Think about a vehicle assembly plant, for example. So you need to know, when you're making that investment decision, if you're the CEO of the company, what the tariff is going to be, 20 years down the road. But you don't even know what the tariff is going to be next week.
Yeah, exactly.
So not only because they're done under executive order, which means the president and the next president could change them in an instant, and they will, but also because they may be illegal. Obviously this is still in the court system. We'll see how this plays out. But, there's a not unreasonable probability that some of these tariffs get struck down, if not all of them, at some point. And so again, I'm that CEO. What do I do with that? How do I? And then even with the tariffs, there's lots of other reasons why you wouldn't invest in the United States. There's a lot of other costs involved, a lot of other issues involved in investing in the U.S. that are very difficult to overcome. And the tariffs, just even they aren't enough to overcome them in people's thinking about investment. So I really don't see any significant incremental pickup in investment in the United States as a result of all these policies. No.
You mentioned AI earlier. Are we seeing the areas of the economy that are doing well seem to be ones that are maybe aligned to Donald Trump's personal interests and the interests of his allies? And does it look like he's almost maybe stealthily reshaping or realigning what the American economy looks like? Is there being more of a sort of focus on service economy, for example, than, as he seemed to speak about on the campaign trail, which was physical jobs, good sort of traditional jobs for American workers? Does it feel like the pivot has actually gone to that it's going to be sort of tech, cloud-based, all those sort of areas of the economy are going to get more focus?
Clearly, AI, anything AI related, is doing very, very well, particularly when you're talking about investment. That's running on its own dynamic.
Okay.
I don't think that there's any significant tailwinds there related to politics or the political environment, except maybe perhaps you could say that there's a different perspective in the Trump administration around the regulation of AI and AI related activities compared to, let's say, the Biden administration. The attitude is, or the thinking is, that we need to allow the AI companies to do their thing. If we don't, we're going to be left behind, particularly in the competition with China. That's kind of sort of different than the Biden administration, which was more worried about the potential downside effects of the AI on labor markets and jobs and that kind of thing, and cyber and deep fakes and all that kind of stuff. So maybe a different attitude there that's having some impact. And I do think AI-related activities are a critical driving force in supporting the economy. And if we don't go into recession, that may be one of the key reasons why we don't go into recession, because of all the investment that's occurring there. One thing I will say that is important: there are no jobs though that are we're losing jobs in tech. The tech industry is actually laying off workers net. In fact, you can do a chart of tech employment. Go back to when ChatGPT was unveiled sometime in 2022. I think it was almost literally that month that tech employment peaked, and since then it's been declining. And now it's below the trend that prevailed before, we saw, AI kind of kick into gear. So, AI is a very significant boost to the economy at this point, except for everything except for jobs. It's not happening with jobs.
With Trump and wanting to just bring it back to this idea of him ignoring statistics or wanting fake statistics or wanting statistics to be gathered less accurately, whatever way you want to look at it, is that coming down to, did he have this sort of hubris maybe that the American economy is too big to fail? And, if no one really knows exactly what's going on for a period of time, is that just completely untrue? Are we about to see a reckoning come through because people just we might not even know how bad things are when they're as bad as they can be?
I'm more of the mind that the tariffs, the policy is more of a corrosive on the economy than let me put it this way: it could potentially be a cliff event. I feel like we're pretty close to the cliff, here in terms of what all this means for the economy. We could go into recession, and it may not be due to the policies all by themselves. The fact that the economy is now weakened because of the policies, is now vulnerable to anything else that can go wrong, and goodness knows, a lot can go wrong. But the thing that worries me even potentially more is kind of the corrosive nature of the policy. It weighs on the economies, both the tariffs and the immigration policy. Weigh on the economy's long run potential rate of growth. How fast can it grow in the long run? AI is working in the opposite direction, but certainly the tariffs and the immigration policy are weighing on long-term economic growth. It's kind of, go back to the UK. Take a look at the British GDP. Just do a graph of British GDP over, say, the past 25, 30 years. And you can go back, you could see a big push to cliff event with the global financial crisis. It's a level shift down in GDP. That was, back in 2008, 2009, 2010. Then you come up to 2016, and what you see is not a cliff. You don't see a drop down in GDP. What you see is a change in the slope of the line. The growth rates are slower. So it means that the economy has been diminished as a result, 10 years later. It's not one of those things that you say, oh, there it is, that just happened. It doesn't matter in any given year. But over a period of a decade, you can look back and go, oh, look at that. The economy has lost its luster. It's diminished because of Brexit, and that's the kind of thing that I think will come out of this if we don't change policy. So it's both the risk of a cliff in the near term recession that's reasonably high, but the thing to be even more worried about is that trend line. Is that going to be bent lower, and are we going to be diminished by all the things that are going on? And I suspect we will. Again, if policy doesn't change and we continue to deglobalize.
Mark, thank you so much for your time today and talking us through all of this.
Yeah, anytime. I appreciate the opportunity. It's always great to talk with you guys.